Forget about those tariff rulings, Greenland is the talk of the town. Rare earth names are right back to moving in a meaningful way. We've also got tensions in Iran escalating, which is causing crude oil to break out of its downtrend. Then you come back home domestically and it's all about Jay Powell's criminal indictment. Feels like no matter where you look in this market, there's quite a bit of drama, and it is translating to some better volatility for trading, which is great. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 3 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off today with a closer look at the SPY daily timescale, and we'll start, of course, with none other than the trend. We have lows, we have higher lows, we have higher lows, and this, to me, is looking like a beautiful opportunity for a potential higher low right off the daily 20 SMA after pulling back from the highest high in the trend count with a candle close right back up over the weekly pivot breakout level at 689. I love the daily bar that printed today. I love the close over the level, and I think there's an opportunity if we immediately flip down to the hourly trend for a possibility of an hourly reversal on either any hourly higher low, and then this turns into a double bottom like this, or it's just a high tight flag here on the back half of this V-shaped recovery, and then we're a Brigade bolt away from flipping back into an hourly uptrend back over 690.75. So I think that the SPY daily bar is really, really compelling. I love the lower wick. I love the location of that lower wick. We've talked about it in the past. We've overshot the 20 SMA. We've overshot the 20 SMA this time. We could overshoot the level, but we could not overshoot the 20 SMA. It's also the lower edge of the weekly expected move. And I think given all of the situations we just talked about in the intro, all of the just madness that's going on in the market, it's pretty compelling to shake off some of the bad news, you might say, with this close back up here at the highs. Now, I think that select sectors in the market are getting absolutely obliterated. You could look no further than software, but for the S&P 500, this is a really strong daily looking bar, and I would pair this immediately, without making you wait, with an RSP that closed at the all-time high. So the equal weight S&P 500 is also offering some degree of strength here. But let's go back on over to the SPY cash. Let's take a look over at the hourly chart, and let's build a little bit more of a detailed game plan for the end of the week. So once again, the easiest way to think about the market is to put yourself in the shoes of the opposite side of the trade. If I'm thinking long, then I want to start thinking, okay, what would the bears like to see? And let me make sure that that doesn't happen. If I'm a bear, this close here is pretty frustrating, right? Because if you're a bear, you want bear flag consolidation underneath the breakout level at 689. You don't want to see this end of day ramp on the announcement from OpenAI doing a $10 billion deal. You don't want to see that sort of NVDA pop on the 25% of revenues going to the US government on the H200s to China. You don't want to see that news headline cause a pop here into the close. You want to stay weak in a bear flag, threatening a break and Brigade bolt like this to get into the daily 50, neutralizing the daily trend into an equal low. And we just didn't get that by any stretch of the imagination. So the short-term game plan into early stages on Thursday, as long as we open over 689, I'm quite fond of high consolidation here. Brigade bolt over today's opening print, Wednesday's opening print. This is 690.75, and once again targeting the top end of what I would consider just a range right here. Is this not look below and fail? Higher low back over 689 is the compelling story, and you probably flip back to longs back over today's opening print, right? If we open over 689, test a little toe underneath, as long as we don't go out to a new lower low underneath 686 daily 20 SMA lower edge of the weekly expected move, I'd be thinking about an hourly higher low. Eventually this turns to double bottom, and it's the same idea up and over the neckline, 690.75 perhaps, looks good for a Brigade bolt back into the all-time highs. Now, the threats to the base case are just if the bears ultimately say, no, like nice close, but better luck next time, and it starts looking like a descending triangle. If we get this on just a very quick failure to hold over that 689, so opening drive lower on Thursday immediately to an equal low, any bounces intraday that are met with resistance at an intraday VWAP, something like this, lower highs, then yeah, I'll be open-minded to a potential short rolling around the corner for something that looks like this. But as we just saw with the RSP, the supporting evidence, in my belief, is at least somewhat more compelling on the long side than it is the short side. Right? So 686 is going to be the key level walking forward. Today's low, basically the daily 20 SMA. And again, in the short term, I do believe that opens over 689 should primarily focus on this outcome. Opens above that do not make a severe low look like this, right? Same thing. And I will reevaluate if, again, we're getting pinned underneath an intraday anchored, just regular intraday VWAP. barreling into those lows looking for something like that, right? I will be acknowledging and open-minded to that idea, but base case for now is the impressive daily hammer, strong close over 689, looks a little bit better rather than worse. Let's take a peek at the intraday anchored VWAPs just to show you that this is going to be confluence here at the high break. So again, I think you're a bit more free and clear, so to speak, if you could take out 690.75, which is where I'll be triggering a little bit more on the long side, or at least intraday long bias, thinking about that hammer high breaking as well. And if we just remain pinned underneath it, then, a little bit more neutral through here. I would sort of keep an open mind to the double bottom first, higher low, and then go. And if it just totally rejects it, then what do we know? Breaking this anchored VWAP here probably sets up the move at least to this one. Remember, that's the major anchored VWAP low from 1120, the bearish engulfer way back over here. And if that goes, then it's the 50, right? So just walking down these signposts if we do end up extending underneath the lower edge of the weekly expected move. But I think I've been pretty clear about my base case. I do want to jump into some Fibonacci's because I thought they were so interesting. Come from this low up to this all-time high, 38.2, beautiful support there, bull flag consolidation. Nothing more to say other than that from this perspective on a fib. You could also clear that one, come in from this major low up to this high, and notice that we held right onto the 61.8. Remember, as long as you're over 61.8, usually you're not going to have dramatic odds for a 100% retracement. So I like the fibs. I also like the close here back over the fib 38.2, and just because we're on the topic of fibs, we'll pull it from the high down to the low. Notice that once again, bears, 689 would have been the best spot to keep it for bear flag consolidation, but even had the fib 38.2 and this anchored VWAP from the major low here, and you couldn't close underneath that. Now, it's not the strongest close above. It's not like we closed up here, for example, but once again, just thinking in terms of reference points, the bears didn't really get the job done there into the afternoon. And I'll just take it one step further on a bar-to-bar analysis. On the second hourly bar of the day, right, you've got this long lower wick on the hammer candle there. Technically, you violate that low on the third hourly bar of the day, right? And you technically made a lower low, invalidating that hammer for a reversal. And then where did the bears show up? Did they follow through? Survey says absolutely not, right? No follow through there whatsoever on the SPY low of day on that second crack at it. If you were watching, it was just stubborn, really, really stubborn there on the ES futures, on the NQ futures. That low of day, once it was established, and on the NQ, I'll just show you this real quick, it was the 50 SMA. Right, NQ futures were a little bit cleaner off the level, but QQQ, similar idea over here. So that's that. Let's not get too derailed from the typical process. Let's take a look at the market internals. If you're not familiar with this dashboard, check out the video tutorial in the top right-hand corner. Once again, my base case is that the end of day close was pretty compelling. So what I'm looking for is bullish evidence, and if it's not there, then okay, I got to check myself. But what do we see? Volume flows into the close, not substantial, not up and over 300 million, but again, don't forget the entire morning session was dominated by some odd sell side pressure, right? I see that the futures are slightly lower here in the after hours. I get it. We'll see where tomorrow opens. Advanced decline line, right? Perking up off the zero line rather than in trend lower zone. Intraday, not really shocked to see the index score lower. I mean, the bears were sitting on it all morning until the afternoon, so this didn't really have a chance to build out positive. You need to be over the opening print. You need to be, greater than 0.5% in the upward direction, the whole 9 yards. So I'm not shocked that that closes red, but then look at your cumulative build on the tick. It technically closes green. And once again, think about all morning. The bears are peppering this thing to the downside, and yet what does the cumulative build do? It does not get in gear to the downside. It does not build, quite literally. The cumulative tick does not build lower. It stays flat and then ramps into the close. So the more I look through the supporting evidence, we have rotation taking place in the market. Look at the sectors real quick. It's not like they're selling everything. Software is absolutely taking an absolute beating right now. The financial sector isn't doing the greatest, but they are buying other things, namely staples, energy, utilities, real estate, right? The whole 9 yards here that we can see. So it's not the worst market in the world. I think money is flowing out of maybe some overbought stuff into some more defensive names as we get into some volatility. That's not overly a bad thing. Let's take a peek over at the market profile side of the equation. If you're not familiar with this, check out the video tutorial in the top right-hand corner on what market profile is. Poor low. So we could use some repair there, but let's focus on value area for a second. Here is Monday. Here is Tuesday. Here's today's Wednesday session. So on the ramp into the close of the day was right in here. Let me double check actually. Sorry, my eyes are failing me. Right here was the close of the day. So closed over the point of control, and all this would sort of suggest to me is tomorrow, if we do pull back, the point of control could act as a potential higher low spot. Now, I typically wouldn't want to initiate a position at the point of control. That's really where equilibrium is rather than an imbalance. But if the market supports, we could test what's considered a VPOC, right? Virgin point of control, tag up to it, and then move away. Now, all of a sudden, you're probably talking about that higher low Brigade bolt up and over the neckline of that pattern. The poor low does technically need a little bit of repair, but if I really pencil into this thing, There's a small volume taper there. It's not like we just had, you can see the 40 print on the lows. There's 2 TPOs of excess if I really zoom in, but you'd probably want to see something like, this tapers off more like hundreds in here rather than thousands. Then we're at thousands. Then we're at tens of thousands here, right? That would be a better taper. So it's a little bit brutal on the low, but not the worst thing I've ever seen. If I just want to scrunch this up and check out the other VPOC that still exists, yeah, here we did not take that quite on the low. That would be concerning if we did come all the way down to it. So just making note of that on the market profile in terms of reference points. Good excess on the A period highs. And I think tomorrow I will mainly be watching for what happens with the point of control. Are we above or are we below? Right? If we're above, I think a majority of people who picked this up on the low today will be feeling like this. If we start to sweep that, now all of a sudden pullback buyers who are like me, a little bit more enthusiastic about this hammer on the daily chart, there it is, probably have to reevaluate, which is, I think, fairly straightforward. I think that's a very fair assessment. If we take out the low of the hammer and it fails, then that's a problem, right? So that is what I'm seeing on the SPY side of the market. Let's check in on the QQQ. A little bit sloppy over here. Instead of calling this thing the soggy pennant at this point, I think I'm going to opt for more of the ascending triangle, right? We have broken the trend line here on the top side. We failed 4 times to really accelerate out of it, so I'm definitely carrying that forward in the narrative. But the fact that it's more of an equal high, I'm looking through the lens of ascending triangle at this point. I don't think this is a great spot for new positions to be built. We know that tech is a little bit weaker than that more broad-based S&P 500, so not shocked to see it back in here. I do still like the daily hammer. I like the potential lower wick here holding over the 613. I don't love the overshoot of the 50 of the 20. We technically closed above. I would prefer that this could get up and out quickly tomorrow morning over the 622.50s, something that looks like this. Now we're just tracking that higher low to remain intact. And then eventually, right, we pressure the top end of the triangle. And do we get back to all-time highs on the Nasdaq, which would certainly pressure S&Ps higher, right? So I don't think the markets are destroyed here. I still think there's a little bit of relative weakness in the Nasdaq, which I think is self-evident in the chart itself, being so close to the moving averages still versus the S&P, not pulling back from an all-time high, right? If we take a look at the hourly time scale here, you could see that the moving average stack is right at that level. Sorry, not moving average stack, but rather anchored view app stack is right at that level, 622.50. If you watch the weekend video, I had 623. Small adjustment heads up to that level, 622.50. If we do take that out in the upward direction, I would be imagining a rotation towards the highs of this week. This gap is technically closed. I'm leaving it yellow just to remember that it is technically a gap fill reversal to the downside thus far, and I don't want to lose sight of that potential level. Where things really get nasty on the Nasdaq for me is if we just stay range bound in here and don't do any, like if there's no pressuring of that 622.50 spot, I would become a little concerned if we start to Brigade bolt bearishly underneath 613. That's going to act as my line in the sand here because we would just be losing this previous higher low, right? If we lose that, then you really don't have even the soggy triangle, a soggy whatever. At that point, you're just equilibrium, right? How could it not be? Instead of holding higher lows, you have equal lows and you're losing equal lows. And now it's like, okay, what's the daily trend? It's no longer trying to remain ascending triangle constructive for a potential breakout, right? What this tells us is basically like the premise of the pattern, right? Lows, higher lows, sellers make less progress. Higher lows, sellers make less progress. Higher lows, sellers make less progress, right? All it takes is sellers to feel a little bit of that edge again, making progress, and suddenly, right, less compelled for a possible break to all-time highs. Still, at face value, I like the hammer. I like the closes back over the moving averages. Again, base case for me is neutral. Through this zone right here, this box is neutral territory. I like to get bullish up and over that 622.50. I like to get bearish underneath 613. If we slam into 613, so we overshoot and repair this low and yet bounce, I would probably take a bullish stance on any 50 SMA recaptures for an overshoot and then rally. And of course, the pattern here that if you just fill in the left shoulder, there you go, hourly inverted head and shoulders. All right. Fibonacci pulls, probably not as important over here on a more rangy market, but what do we have? The bottom end of this zone in here from this low is the Fib 61.8. So if you lose that, once again, I think it's fair to say that the bears are building an edge. Notice that the pullback is not clean to the 38.2. We've overshot that. We know the Nasdaq is the nasty Nasdaq for a reason. It kicks, grunts, bucks, snorts, does all sorts of stuff. It overshoots. So we got our overshoot. Let's please not overshoot 613. I'd be concerned about that. Let's see if we can get this, and that would be the bull case into the end of the week. Let's jump on back to some dailies, and let's just reset this out to the Nasdaq internals. What do we see over here? So into the close, strong volume ramp. That gives me a little bit more of a bullish taste. This closes positive on advanced decline line. A little bit more of a bullish taste there. Same thing with the cumulative build on the Nasdaq ticks. Let's jump on into our market profile for the NQ. Any big differences over here? Survey says absolutely not. We do have a little bit of a 45-degree line here, which would indicate sellers painted themselves into a corner, very similar to what we had on the Tuesday session. Obviously, that didn't work out that well, and markets did not resolve higher, but we opened on the gap down anyways here on the Nasdaq. The other thing to point out, I guess that's maybe a little bit more interesting on the Nasdaq. Let's go back to this hourly chart for just a second. If you recall, right, where is it on the where's the NQ futures? Where's my NQ futures? Let's go back over here, and I just want to pencil out for a bit to a 15-day chart. That's cool. Here it is. This is that void of price action, right? Back here, the NQ futures did it a little bit more cleanly, but this, right, these prior highs of this range down here, which we know the market gapped up the next day, kind of now acting as support in that area. And if you just go over here, you can roughly see the same thing. If you really make a stretch, right, you could say that the top end of this bear flag there is acting as lows here. You know, I generally am a little bit more interested in that 50 SMA, but I just at least want to cover that, considering what goes straight up can sometimes come straight down, right? That is the QQQ. We talked about market profile. Let's just go back over there for a second. How is the excess low? Is there an excess low? Yeah, I period low is much, much cleaner than what we had over on the S&P 500 side. I mean, we're with a 5-point y-axis here, good volume taper. That's looking decent. The only discrepancy would be to say that the value area is lower in the profile here. Point of control did not migrate to the midpoint. So tomorrow, as a possible idea, right, if we're going to flip bullish or remain bullish, more optimistic, you probably want to open out of value to the top side, pull back and be able to hold this as a supportive high or low, and then rotate in the upward direction. If you open in value, the market should be more so content and possibly threaten, right, this idea here that you need to go 613, firm up this level, and then you have inverted head and shoulders. So just pay attention tomorrow morning, whether or not you're opening in or out of value. If you're opening above, much more of a compelling argument for a higher low over the value area, which makes anybody who bought this down here remain fairly content on their purchase, right? That is a little bit of auction theory inventory positioning for you. Let's jump on over to our IWM, see what's going on with a daily chart over here. And let me actually reset this so those VWAPs go away on the hourly chart. We're not blinded by them. Oh boy, we're asking for too much at Thinkorswim. Another reason to be bullish, the S&P 500. Look at the IWM new all-time high close. This continues to speak to the broadening nature of the market rally. I know it's a term we keep using over and over and over again, but when you're getting a market that's rotating, right, it's very difficult for me to say, hey guys, spiders, it looks like they're going to crash and burn and go to zero. The market still seems more bullish than it does bearish. You're definitely not going to really get a market crash when NVIDIA looks like this on a down day in the market, right, hammering out there. And, I'll show you the nuance there in just a second. But let's go back to IWM to continue. Looked underneath prior day's low, closes at a brand new record high. Again, what's to be bearish about on IWM there? It looks good with plenty of room for a daily higher low. You could be over 258 on a retest. You could be all the way down here on a retest at 252.75, daily 20 SMA. Really don't see any issues with this daily configuration. I'd be bullish until proven otherwise. If I look at the hourly chart, nice push out into the end of day over this little shelf. If you really wanted to get sneaky here, you could probably put a box and a range around this and say bullish above, neutral in between, and then bearish below for the full rotation of the 2-day range from this, which is Friday, Monday. It's a possibility. I'm just going to continue to use broader levels on IWM as a bull-bear neutral indicator, and for now, it's still just bullish, right? If it pulls back, that's fine. I would be looking for bullish buys, not necessarily in the IWM at 258, but does this catch a bid, which translates to S&P strength? Can we find something in the S&P that's worth buying, right? That's kind of the way I've been using this recently, at least, and it's been somewhat helpful to remain a bit more optimistic about markets. Let's hit those intraday anchored VWAPs now. You can see we're riding above that Monday anchored VWAP. We're above the entirety of the stack, and lo and behold, where are these, right? They're going to be right there at 258, the big zone where I would ideally like to see a higher low if there's a pullback, right? Something that looks like this. All set, 258 is the big level to beat. Let's jump on into, we'll go fib pull from the low just because this is such a clean rally off this 50 up to here, fib 38.2. I mean, you can't get much better than that. Fib 38.2 there, 61.8 down here. Looks pretty darn good, if I don't say so myself, in terms of reinforcing both of the pullback levels we just talked about on the daily chart. Let's hit the Russell side of the market internals. See what's going on over here. You've got yourself okay volume inflows. It looks, pretty big when you have it like that, but if you just zoom out, not really up against the big side, 125. You got a little bit of a positive push here on the advanced decliner, and the cumulative build into the close is nice and stable. So I like that. Another thing to carry forward, I should have mentioned this earlier on the S&P as well. It just struck me here on the Russell because we're closer to it. But the overnight all-time high set from CPI, right? CPI came in slightly cooler than expected on the month-over-month reads. The CPI overnight high is unrepaired, and the same thing exists out there on the ES futures. If I just go here, let's see if, I don't want simple levels, I want default maybe. Yeah, there it is. There's your overnight all-time high from CPI. That's 70.3625 on the ES futures. Not bad. Something to carry forward, and it will act as a target to the upside if we start to really get more of a rally going here tomorrow. Something that looks like that. Remember just a moment ago I said, oh, futures are down post-market? I mean, you're just hammering right out here on the 15. Can't claim victory yet. We'll wait for the regular trading hours tomorrow, but pajama traders, do your thing. Do me proud. Let's see if we can get that daily hammer cooking. Let's get back on over to market profile to finish up our Russell, and we'll see what's going on over here. Big reset on the view of this chart. There we go. That's a little bit better. So you're going to miss, right? See this upper wick? That is your CPI high. But let's just focus on today's daily structure. The value area point of control are lower. We didn't really close firm up here in the M period. That is going to leave us a spike on the M period high of day. What I do find pretty interesting about this is that the value areas here are almost one and the same. Value area from Tuesday, value area from today's Wednesday. That's going to be mechanical. If we can hold that, once again, I think it's fairly straightforward that bulls would be in control. That's roughly about 26.55. As long as we're over that on Russell futures, bulls in the driver's seat. If we take out the 2-day low, we are looking for lower into the bottom end of this 2-day range, which would bring us to roughly about 26.15 on the RTY futures. Let's finish that up. Let's reset over here and let's take a tour through our sectors. Who is leading, who is losing, and where was the weight? Well, this week thus far, we've got the XLP leading 3.39%, followed by energy, real estate, utilities. At the bottom end of the barrel, we can see over here, XLF really taking a digger on that JP Morgan earnings announcement. That was on Tuesday morning. And then not really able to recover on today's Wednesday session. We get Goldman Sachs and Morgan Stanley tomorrow. XLY discretionary here down about 1.31%, and then communications and technology follow. Not really a great picture for the risk on cohort here. However, the market has pulled back, right? We did not really break out to a new record high with meaningful intention. It's not like we expanded range here. Friday's high was the high. And we haven't really gone much further than that. So if the market was ripping to a new record high and we were up here being led by the XLP, oh my God, right? Problems. Hey, heads up, this is incorrect. Let's short this. Gotta go, this is not right? The heavyweight sectors are not driving this action. Let's look for a divergence. Let's get short. But the market's just been pulling back. The market's been grinding around. It's testing the daily 20 SMA. We're getting, sector-wide rotation. Money's flowing out of some tech stuff, out of financials, into some other defensives. I don't think it's the end of the world on a pullback here. Let's take a look through the actual structural charts. This is just an absolute monster move on the XLP. Big shout out to, in the CPI report, we learned that underwear was one of the hottest inflated items. So, look no further than a VSCO, right? Victoria's Secret here breaking out big time and continuing. So blame Victoria's Secret, maybe your Walmart as well. Walmart having a nice little route here. I should say run, not route. And then Costco as well, making a nice move into its daily 200 SMA. Not that I think this is a buy here at the 200, but just on a nice break back to the upside. So that's your XLP. It is a little bit more defensive, but it's at least not a headwind for the market. It's not fighting the market. XLE breaking out here. The ratio chart is also starting to break out a little bit. We don't typically have the XLE on the ratio grid, but we'll take a look today. If we go to the XLRE, you can see this is coming back into its range, look below and fail. I would think if we're going to get a deflationary impulse out of the tariff rulings, and if generally markets starting to price in better inflation metrics, CPI was helpful, and rates are going to come down, what's that do to real estate prices, right? Makes sense here that this is not really all that successful underneath the 7-month balance low. These are still really the lightweight sectors, XLP, XLE, XLRE, XLU, XLB, all really, really lightweight sectors. So these things are not going to move the needle for the market. The market's struggling because you're seeing some of this action over here. So XLU, rotating to the top side, I could maybe start to see the argument to build out a right shoulder in here and then maybe reverse the curse of the daily trend, daily 200 SMA hold, but I don't really love this chart. If we go to industrials, things start to look pretty good. This is a great break to new highs. It's holding over the breakout point from here. Looks good, over 162.50. I don't see any issues with that. Look below and fail on prior day's low, closing back inside prior day's range, 8% of the S&P. If we jump on over to the long bond here, you can see it's starting to lift a little bit. I would pay attention to the tariffs when they announce when and if they announce the ruling on tariffs here. I would watch bonds. We've talked about it in the pre-market prep now a couple of times, but ZN is going to be your best friend there. The notes will light the way in terms of cutting through and just providing the truth rather than you trying to interpret the headline. Let's go to the XLB. Looks like it's due for a bit of a pullback, a little tired with the inverted hammer up here after a very impressive run to the top side. If you pull back, not the end of the world, plenty of room to set a higher low. as we've said time and time again, this is such a lightweight sector. It's not hurting the S&P 500, but even if it pulls back, it's not going to do much damage. It's just like, it's almost negligible in the weighting. Just to give you a reminder, you can always look at this stuff, fundamentals tab under analyze. Just take a look over here, XLB, 1.58%. So that could be falling off of a cliff. If XLK is flat, you're probably not going down in the S&P 500, all right? Just to give you an idea. Let's go on over to SMH, see what's happening with semiconductors. Great looking daily hammer. It's kind of just in the middle of this nowhere range. There's the possibility you could call it a higher low if we get going out of the range like this tomorrow. I think it could easily cool off. Another thing to pay attention to is going to be TSM earnings tomorrow morning. That could easily throw a wrench in the mix for these semis. We'll pay attention to it. I would think that as long as we're over the 20 SMA and this as a breakout point, you could get weekly or daily Brigade Bolt here over 371.25 and be A-OK on SMH. XLV, not a bad looking chart, starting to hold that daily 20 SMA. Makes me think of a GH, Guardant Health. Also sticking in here at the daily 20, possibly getting up and over. You could have an early entry to the potential of a breakout here over 112.50 if it's going to go. ISRG did not go. It ended up gapping down. Good thing for stops out of there at the 50. Let's jump on over to mRNA is another one. These are not trade ideas, by the way, at the end of the video for you. I've got additional 3 ideas. But as we look through some of these sector things, I don't know about mRNA stretched to a long right at the tippity top of the move, but certainly paying attention to the possibility of a pullback, something that looks like that for an mRNA. J&J had a great day, moving in the upward direction, so healthcare doesn't look half bad. If we look at XLF, this is kind of becoming the first crack in the armor that I can see. Let's not forget that XLF is second heaviest weight sector by market cap here. It does have a daily hammer off the daily 50. There's the possibility that you're over that and you're getting back into the 20. These things are possible, overshoot. We like to call that look below and fail on the daily 50 SMA. I just don't like that on the JPM earnings, you could not sustain this support here. You've kind of come in a little bit deeper than my preference. We'll see what happens next. I don't want to count it down and out, but I am just, again, making note that this is a crack in the armor. Doesn't look as strong as it could have. Some of these names look really good headed into earnings, right? If we just go to JPM, obviously this will be in the core list of companies, but this looked pretty good, flagging up here over the 20 SMA, completely failed it. Tomorrow, we'll see what happens with GS, Goldman Sachs. I mean, this looks great, right? In a vacuum, not knowing that earnings were tomorrow morning, this would look fantastic as a possible flag here over the 20 SMA. Hammer, look below and fail on these prior lows. You could say the same thing about a Morgan Stanley, a very similar look. A little bit more of a failed breakout perhaps, but with the possibility to recover tomorrow on a low, higher low, higher low. These things look good, but all it takes is earnings and the market response being poor, and next thing you know, XLF is going to start to get lost. One thing I will say is that the earnings numbers so far look good. I mean, we saw Bank of America trading, high trading volume, JP Morgan high trading volume, profits look good, double beat and raise type thing. Just not really following through out of the XLF. So I think it's a spot to watch. It's a spot to be a little bit cautious. It's a spot to be defensive on. If it really starts to crumble, please pay attention. You lose financials and you lose semiconductors, it's going to be game over for the market. Regardless of what that IWM does, regardless of what that RSP does, you lose financials, you lose semiconductors, kiss it goodbye. Let's take a look at the XLY. I love this. This is a great retest, in my view, of these prior highs. I would be really, really interested tomorrow in seeing whether or not we could support here and move back up into these highs. Makes me think of Amazon as well as Tesla, which are both 2 trade ideas we'll talk about, of course, in the core list of companies over here. Let's jump on into communications. Meta's been weak. Netflix is really weak today, bearish engulfer. The saving grace, of course, is Google. As of right now, not much to really comment on in this range. I think it's fine until proven otherwise. You lose the 50, I'm concerned. If you just noodle around in here, we're doing A-OK. And what I would really like to see is tightening up there and going out to a new record high. We'll see if Google can do enough to do that. Let's be a little bit more specific. If Google can remain strong enough to produce a higher low in the sector level product, that would be bullish, right? There we go. Let's go XLK. What's going on with the technology sector here? Very, very, I don't even want to say wild action because it's actually quite tame inside of this range, but you've gone wall to wall in a very short period of time. Lows to highs, back to lows, right? And you're just like, you breach the highs, you come back in. You breach the lows, you come back in. So it doesn't seem like technology really knows what it wants to do. I would prefer, right, that I get this alert tomorrow morning over 147.26, and we can remain bullish the S&P 500, the Nasdaq, the whole 9 yards. If we lose it, then all right, now all of a sudden I can't really maintain that great of a stance here. That was the final sector, but I do want to hit the MAGs, which is the MAG 7 ETF. I'm just pointing out that this lost this low thanks to Microsoft and Meta more recently. NVIDIA is not really performing well. So the Mag 7 ETF is breaking down. That's not great. And if I go IGV, which is the software ETF, you could see that we are just getting brutalized over here. Look no further than something like your CRM on Tuesday, just getting absolutely destroyed underneath the 50 SMA from this little, head and shoulders, let's call it, all the way back down through the thin structure into this level at 237.25. So software, really not it. Again, look no further than a ZS, even a Zscaler is just, brutal down here. It's all getting beat up. ServiceNow is no good. Adobe is no good, right? All these names are really kind of taking it on the chin there. So therefore, semiconductors, SMH, we can't lose them. If we lose semis and the Mag 7's not performing and financials are slowing down, this is your huckleberry. You got to watch that SMH. Let's take a peek over through some ratio charts. Let's maybe speed it up through some of the back half of the supporting evidence. What do we have going on here? Tech sector still looks meh, soft. XLF does not look great, losing the 50. This still looks okay on the XLY. This is on the XLC. XLP perking up, again, defensive posturing with that performance there. It is showing up in the actual sector, and the XLE is breaking out here as well, which we talked about when we were looking at the XLE chart. Keep an eye on XLE, and let's just go maybe to the CL as well. Crude oil, as mentioned in the intro, breaking this trend line, Iran tensions, the whole nine. It's technically just breaking a technical level. It's breaking a technical level, which to me is the main thing to key in, because remember, when the whole Venezuela thing took place, market didn't even budge. So you need the technical event paired with it. Great, we're moving higher. Unless you're like an oil expert or you're already long in XOM, I don't know that this is the best place to be. It looked like an Oxy, for example, Occidental. It is higher. CVX is another one that's going to be slightly higher. But look at how choppy this move has been for it to actually unfold. How's a FANG of the world doing? Again, it broke out, failed, came right back in. Now it's back out. You got to be in the right spots here. Otherwise, I think you're just in for a bit more of a headache than anything else. But energy, it is breaking out. I wanted to talk about that with the XLE ratio chart there. Let's get into our A and B set. I really don't have much of an interpretation here other than neutral. It's just right on the cusp of neutral, right? You've lost this. This is apples to apples. This maybe looks a little bit better than that. This is doing all right. Maybe a small squiggly check mark. This is totally just sideways. This is like, this kind of sucks over here. So I'm neutral on the A set. If we go to the B set, we could see over here that gold continues to push out to new record highs, pushing this ratio lower, which technically would be a bit more defensive in terms of posture. But gold, I think, is trading a bit more on that momentum style, if you will. I think gold is kind of in a squeeze or a momentum push or maybe not a squeeze. It's not like people are huge short gold, but I don't think it's not like it's all about the dollar at this point anymore. I don't think, at least. If we look at Bitcoin, it is starting to fire a little bit of an opposite look, which is risk on, right? This is saying risk off over here. This is saying risk on in Bitcoin. Bitcoin did take out the bear flag highs. I'm looking for a daily higher low over that level for 94,600 on the spot price. If we can check back and do it and close this Friday with a bullish signal on the Sailor Shift, I'd be willing to continue to maintain a risk-on appetite based on that. TLT ratio not doing anything overly harmful, still over an upward sloping 50 SMA. Let's jump into, here's the dollar. Speaking of dollar, not really doing much. I think that everybody's holding their breath for tariffs. Got a little bit of a wiggle and waggle on CPI in here, but not much to actually talk about in terms of range expansion. Pretty sideways. Same thing on rates, just inside of this compression over here. If we jump on into our, let's go metals, because I know some people will want to hear about it. I'm just going to go over here for it. Gold, you can see up there, new highs. Silver, parabolic rip to the upside. This is not something I would start shorting until it's probably at 100. Had some jokester say, hey, total hindsight to call 100. What are you talking about? It's not at 100 yet. So anyways, silver, when and if it gets to 100 and there's a big parabolic blow off top, I would be looking for like 3x, like 300% of average 20-day volume, something way up here. I would be looking for another close up and through the upper Bollinger Band, which we're through as of right now. Let me hit that real quick for you. Bollinger. Oops, not the crossover. We want this. Let's get rid of the crossover. Let's hit OK. There it is. So over the upper Bollinger Band, more extension beyond that. The Bollinger will catch it tomorrow on more of a vertical move, right? But the higher you go, the more nasty that snapback is going to be. So I still think it can go much higher than people think. $100, the round granny number, is what many people are probably thinking about, and we'll watch to see what the reaction is when and if we ultimately make it there. I do want to go over to PL, platinum, which is still coiled up in this wedge for metals, and if we just look at some SCCO, Southern Copper, continues to rip to the upside. FCX also ripping to the upside as well over here. So the metals all doing really well. We'll talk about metals when we get into our you know what? Let's talk about it now. Let's go MP. Rare earths, metals. MP looks like a solid one here over the pivot at the 67 handle. If we could get any sort of intraday check back tomorrow and then off to the races, you know, thin structure, maybe this squeezes again up towards that 100 mark. Would be interested in this. It does still have an opportunity for the moving averages to remain stacked quite nicely, right? The 50 SMA starting to flatten. 20 is going to come up through that soon. Well above the 200, not bad. Anything over 67, looking for that upside. The biggest one, CRML, is from what I understand, and a big shout out to John in the Squawk this morning who confirmed, they've got like the largest exposure to the Greenland situation. So critical metals, it's CRML, the ticker. You know, best opportunity would have been to buy this over yesterday's high on an uptick in volume. Obviously, 437% of average 20-day volume is huge. These things are waking back up. This thing looks to be like something you should keep an eye on if you're interested in this theme. Other names, UAMY, in the same sort of idea and sector. Nice $8.50 pivot here with a gap to close overhead as possibly a first target up around 1035. Let's do a little bit of 1035 action there, as well as the gap close at 1141. That is going to be 1140 works for me, and let's hit that as yellow. So something like this, boom, boom. There you go, out of this little, you know, build the handle and then get out of the cup and handle. That would be the upside top there. And then beyond, just monitor for continuation, right? These levels up here. The final one that I would say is at least playable is the quad U. There it is, Energy Fuels, moving in the upward direction, a little extended as we can see here from the 50, but you know, and I don't think that this is just a clean setup to buy right here, right now, but these stocks should be in your universe as we get this Greenland thing really starting to heat up in the headlines especially, okay? So those are the critical metals, rare earths, whatever we want to call them there. Let's get back on track. We were just looking at gold and silver and metals before we moved into inverted ZT, and we had our fundamental conversation, which will be a segue into all this volatility anyways. Looks like the rates for a Fed pause are kind of right on par. Notice how this has gone nowhere over the last month and a half or so, so I wouldn't expect much going on over to our Fed watch tool. There you go, 95% odds still of that pause from JPOW in the next meeting on the 28th of January. If we look through some of the most recent data, let's just close that out. Oh no, that's not what I wanted here. There we go. PPI, now I guess we'll go to this calendar. Sorry for bouncing around. Usually they have the better read on the year over year over on Trading Economics. They have the core as well. But anyways, you can see the beat on the month over month here, and everything else came in at expectations. So a little bit soft on the, cool I should say, on the month over month core CPI, which was well received by the market. We made a new pre-market high, but then we just kind of had to look above and fail on the all-time high, right? So I think the daily high or low that's been established is, you know, we're sort of thinking through this already as being a non-issue. And once again, if inflation isn't really subsiding on the year over year, we do want to kind of see Powell take it slow with those rate cuts, which is maybe another great segue into what else is going on with the tariff stuff, the Supreme Court ruling, right? The more we just kind of delay those releases, it seems like these odds keep climbing higher. This morning they were at 28% odds. Not that a 2% jump is huge, but you know, that is, the more delayed it gets, the higher these odds seem to go in the opposite direction there. This is Polymarket, and this is Kalshi at a 33.6 from this morning, right? Down a little bit further. Where were we this morning? Down at 28. Yeah, again, 28.9%, 27.3% chance as we were coming into that actual decision, or at least the forecast decision time at 10 o'clock, and just no dice. So Supreme Court ruling in favor of tariffs seems like a no-go. Once again, do not try to outsmart the market. Watch your ZN, which is your 10-year note. If the ZN moves up, rates will move down. I would imagine that the IWM moves in the upward direction. Risk assets move in the upward direction. If the opposite happens, you could put the pieces of the puzzle together. We will see when they actually announce the ruling, and we'll just take it in stride. Again, just let the ZN cut through and offer you the truth there. In terms of other things going on, you know, I'm not going to play geopolitical expert on Iran or Greenland. I'm just telling you what names are moving because of it. It's the oil, it's the CL, and it's the critical metals, rare earths that we were just talking about as well. Here is the earnings calendar for the rest of the week. It is TSM tomorrow morning, where all eyes will be. Remember, if you lose semiconductors, unfortunately, I don't think the market's going to have a fun time. You've already lost financials. We'll see if Morgan Stanley Goldman can make up for it, but JP Morgan was the first domino to fall, and it does not look hot based on their release. Let's go back on over to the platform here and finish up our supporting evidence with the bond relationships. All I want to point out over here is that this continues to drift in the downward direction, which would suggest market expectations are easing in terms of higher inflation, which would be bullish for rate cuts continuing through 2026. If we go on over to credit spreads, it still looks like risk on with these things now underneath, upward sloping still, 50 SMAs, that is bullish. If we take a look at junk bonds, here's a heads up. If you want a little secret, right, there's going to be a dividend payout at some point. This is going to gap down, I would imagine, on the payout over the next couple days. You could double check me in the comments on when that's actually going to be released. But look at the equal low versus the lower low over here on the SPX. This thing has lit the way for the market for a very long time now. Remember that this was a higher low, this was a lower low, and what did the market do? It played upside, right? HYG, higher high, equal high in the S&P. What did the market do? It played upside. So as of right now, there's no reason for me to not believe the HYG unless there's a big black swan overnight. It's just another part of the thesis, in my view, with the SPY daily hammer, with the RSP all-time high close, with the IWM all-time high close, with, as you'll see, NVIDIA not breaking down. It might not look great, but it's not breaking down. I just don't think you're going to lose the S&P quite yet unless those semiconductors really get brutalized tomorrow morning on a weak print out of TSM. Let's get on over to total breadth, which is expanding. Not really a shocker over here. We already looked at RSP, so up on the moving average stack, as well as still positive, small downtick on the new highs versus lows. There's your RSP all-time high close again. And if we look at the QQQE, I would just offer this one as well as a back pocket idea. You're already at equal highs to the all-time high on the QQQE, the equal weight Nasdaq. So, oops, we want to zoom over here. On an equivalent basis, like, this is playing out. This is showing us that, yeah, breadth is pretty decent out there in the equal weight NAS. Let's jump on into our volatility complex. With every bit of drama that's out there, we didn't even touch upon the whole Jerome Powell debacle. And, again, I'm not really here to opine on that. It's either like, they will find him guilty of lying or not. And, I think that it's, again, I just won't opine on it. It's just it's what it is. It's if it's not this, then it's that. If it's not that, then it's over yonder. If it's not over yonder, then it's over yonder, right? So volatility creeping up as people gear up for all of this drama that's taking place. This is helpful as a day trader intraday, being active, looking for volatility range expansion. Thank you. Bring on the volatility here. It's been a great 2 days, Tuesday and today's Wednesday session in particular, looking at range expansion to the downside. Meta and Microsoft have been 2 home runs. This is like pretty solid stuff with the VIX creeping back higher, offering a little bit more intraday follow through than what we've been getting into the end of 25 with just, really, really pinned VIX sub 15. I mean, bullish, yes, but just nothing much in terms of intraday follow through. Let's go on over to the VVIX, which is volatility of volatility. Notice that this is over our trigger line at 103. That's the first step. Over 120, duck and cover, right? So 103 starting to creep up there, and I would also want to go over to the one-day complex. And I'll also show you the skew today because people are reaching for insurance. If you look at this, still in contangos. If you look at this, still in contango here. So money managers still feeling bullish about the market. We'll get the name print, NAAIM, tomorrow. Usually it's Thursdays. So we'll see where that comes in. Fully invested, not invested, levered long, whatever. But one-day VIX also not really creeping up and over that 1275. No issues on the volatility complex. Now, again, I do want to show you that people are reaching for insurance. People are somewhat skeptical here. Skew is reaching up towards the top end of its range. And if we go on over to the trade tab and hit something like the VIX, and I just want to show you the option stats, take a look at your call sizzle at an 11. That just means on a 5-day rolling average, you've done 11 times the 5-day average volume here on the call side of the VIX options chain, which is, again, people reaching for insurance. So just understand that. Volatility is coming back into the market. It's being extremely helpful and lucrative for day trading and actually getting the follow through underneath or above key levels. So with that, let's hit the core list of companies. Let's keep this thing moving. Let's see what's going on here with our NVIDIA. So what I want to point out about NVIDIA first is that the daily chart sucks. We all know that, but let's not just kind of whine and cry about NVIDIA. It's fine, right? It is what it is. It closed this gap, and it did offer a nice lower wick there. I also want to pencil in to we could even do it on the hourly chart, but I think that it's probably better to look at on a 5-minute chart. What I want to point out is NVIDIA was straight down off the open, very similar to the SPY, right? Straight down off the open, very similar to the SPY. But notice what NVIDIA did. SPY made a lower low out, let's say after 10:30, and another lower low into the afternoon 12 o'clock time frame. What did NVIDIA do? NVIDIA said, I'm all set. Higher low, higher low, higher low. Little sweep here on that afternoon headline but then close up here for that daily hammer. So I guess the point I'm trying to illustrate is that NVIDIA did not play with the market in terms of a big downdraft on the intraday for follow through. It was like one snap to the downside, and that was it. So I'm trying to illustrate once again that this double bottom here technically could offer a higher low. Doesn't look like they were hammering NVIDIA. I'm not thrilled about the loss of the daily 50, the daily 20. I don't know that it's necessarily a screaming long, but if you don't have NVIDIA drilling to the center of the earth, then you probably have at least a neutral market, right? This is the top dog in the S&P 500, the top dog in that QQQ. So if that hammer can ultimately trigger back over the moving averages, or at least into the moving averages, I don't think you want to be an overly aggressive bear on the broad market. These days, the Mag 7s haven't really been the best traders, although, I shouldn't speak. Let's knock on wood. They have been decent the last 2 days in Meta and Microsoft, but NVIDIA, nothing to really do about it. I'm just pointing out that it's not bearish for the broad market. If we go to Apple does look like a bear flag here. Didn't really do anything impressive today, more of an indecisive doji on the close. I would be open-minded to maybe some lift back into this consolidation. If I'm going to try to long Apple, I either want to long the gap fill reversal way down here and just let it come into that 250 area and then bounce out of it, or I maybe want to let it go here, maybe scalp it up and over through this thin structure, but then I'm even more skeptical for a lower high because of its daily chart. I mean, think about this. Massive overhead supply from the head and shoulders. Everybody can see it. Everybody can see the neckline. I mean, that'd be a pretty darn good daily 20 SMA rejection if there was a rally to get there, set the lower high, roll over, make an H pattern, then we're lower into earnings, right? It's a possibility. So I think Apple, I'm still a little bit more biased short. It kind of failed this massive pattern over here where it could have, if it was going to remain strong, have nice higher lows. The gap up failed. None of this stuff at the 20 held. The 50 didn't hold, rather. And it's just been kind of bludgeoned since. Let's go on over to Microsoft. This is an important pattern. You get big double top on the weekly. This was the neckline. You fought with it for months. And at this point, it's starting to give way to the downside. If you lose Microsoft, you might start losing some S&P strength. It looks like it is starting to be lost, FYI, on Microsoft. You pair it with NVIDIA, and that's where I really think you start to struggle like tenfold as much in the S&P. But Microsoft, breakdown there, losing the weekly pivot high as well. If I go out to that weekly chart, I just want to show it to you. There's the double top, of course, but if I do this, right, you're underneath that. So it's a big weekly bear flag breakdown. It was a great trade today, and we'll continue to look maybe for some day two follow through now on Microsoft underneath these lows. As long as lower highs are underneath 468, no problem there. If we get intraday rally and then lose a VWAP or something like that, that could also trigger a short. Here it is on the hourly chart, pretty linear move. Not much to really talk about in terms of new pivots or levels on the screen. Just either counter trend to here, lower high, or something that's arbitrary. Lose the VWAP intraday. Let's say a VWAP looks like that. Lose it, lower high underneath, equal low could be the target, right? If it's going to go back in the upward direction, you got to show me like a miraculous recovery effort here. Save your candle, but I don't see it the way everything's going with software right now. That IGV is really not helping out the case for Microsoft. If we look at Amazon, Amazon's a much better chart. I love the opportunity for a higher low here at the moving average stack. I love the opportunity for an inside day tomorrow, long on Friday over its high. It is overshooting this level here, prior high, which acted as prior highs and even support there. So 238.75, no dice. But if we go on down to the hourly chart, again, all it might take tomorrow is a little bit of one of these. And I would think more so about the long opportunity on Amazon rather than a short. If it does come all the way into the moving average stack, I'd like to get it a little bit extended there and then look for a snapback intraday on like a 5-minute or a 2-minute reversal pattern off of 233.25, doing a little bit of bottom fishing in the short term, but in the long term, right, ultimately what you're trying to do is just build out these higher lows here. This is the breakout point. This is where things really got excited on Amazon. If we can retest that and hold it, that's looking pretty good. That would be a next step back to the equal high. Right, that's Nancy. Let's take a look over at the Goog. This continues to be an absolute beast. Just strong. If I slam these two bars back to back and sort of superimpose them, you get a little bit of an indecisive doji. Hard to get new longs up here being extended from the 50, just sitting on highs like this, but it's a grinder. It's a grinder to the upside. The theme here on Google has been opening pop, opening drop, reclaim the VWAP, and then go. Right, that's really like what the intraday charts have been. That was this, that was this, that was like this in here, that was this. Oops, that green day back there. So that's the way that one's been working. And I don't think there's really anything for me to do about it right now. It's a little extended for my taste. I would prefer, here, something off this 322 might be nice. If it just noodles around, if it builds a long enough flag that's sideways for long enough, then Maybe it's out to new highs, but we shall see. It hasn't really been a momentum market, but if volatility creeps up, maybe we start to get it. Let's go on over to Broadcom. I would stay away from this one into the TSM earnings and just kind of wait for the clarity. I don't love the chart. I've been talking about how gross this consolidation has been for a while. I still think it needs a hard reset. I would love to see it. Didn't mean to zoom there. I would love to see it into this gap from down here. That's back to our prior earnings. Daily 200 kiss, something along those lines. I think it needs a hard reset. Nice rejection of the daily 50 SMA. Clear lack of strength from buyers. Tried to break out. There was good relative strength on Tuesday morning. It did break out. There was a decent intraday move, but just totally flopped with the big failure today back down to these lows. So not really fond of the AVGO, and I think it needs a reset. Let's go to the metaverse, another great trade of this week. It continues to be a testament, if you want to take a tidbit away from a intraday perspective, trade the best daily charts. If your daily chart's got an A+ level, meaning that it's got many, many, many data points against it, if it's like this big pressure point where everybody can see it and is going to feel pain, those are the charts you want to trade these days. This is like this along with Microsoft. That's all it took, and all of a sudden the year's off to a decent look. So this is the next step. Lower high underneath the 50 SMA, underneath this 637.50. Really not bad. And as long as we can sort of set that lower high, come into these lows, I think we could slow down into this chunk of consolidation. That's where we start to find a little bit more of those buyers. Meta's continued to release some headlines about the metaverse layoffs as well, trying to improve some bottom line. This was when they announced the cancellation of Reality Labs. Doesn't seem like the market's cared really much ever since. So even though they're buttoning things up, not being rewarded for it on the actual stock price. So lower highs, bear flag consolidation. I would maybe button up shorts and start to reevaluate in this zone where we've bounced from in the past. But for now, I think the short side is still working. Let's jump into Tesla. I like Tesla's daily bar. It's a hammer with a high right at the 50 SMA. So what I'd like to do on Tesla is try to trade this as a daily inverted head and shoulders and try to get long the right shoulder here into the neckline and then build some, up and over that 456. Been waiting for the right time to get long Tesla after just trying to day trade it back here and just getting no momentum there into the mid and end of December. It was kind of, I'll just be honest, it kind of sucked trying to day trade Tesla on momentum into these highs. It just could never get in gear. So the swing traders rejoice on Tesla, and I'm looking to join them and have that rejoiceful moment as well if this is going to be inverted head and shoulders over that 50 SMA, Brigade bolt there to get it into the neckline. Optimism in me would say here to close the gap and then work towards the 500. We fail that and everything goes to hell in a handbasket. Fine, reevaluate under here. But the risk reward premise of the trade would ultimately be that. I mean, that's wishful thinking that you would go straight to the all-time high. But that's ultimately the range that I would like to, as a swing, try to get some strength behind, seeing this as a weekly higher low and this as a daily trend reversal from down, lower highs, to now lows, lower lows, higher lows, and then this higher high there. So that's the main thesis on Tesla, sort of taking a less granular approach, zooming out a little bit on it. I'd love to see a 50 SMA look below and fail, getting that right shoulder built, and then trying to take out the neckline into the future. We'll see. Ideally, this happens and gives some cushion ahead of earnings. I'd be willing to hold it through earnings if, let's say, we're here pre-earnings, and the expected move is, lower edge here, upper edge way up in, blue sky territory is great. Hold it, but for now, that's just sort of my rough thinking on Tesla for whatever my 2 cents are worth. Let's go on over to JP Morgan. We talked about this chart already, smashed on earnings and just kind of dead now. I don't love this. If it was going to hold somewhere, it needed to hold over the top end of the breakout point, which it had already done once. You've lost the 20, you've lost the 50, you're back inside this chop and slop. Unfortunately, I just don't think there's much for me to do on JP Morgan. Maybe there's some kind of support bounce off the low end of the range, but I just don't see it yet, so we'll just take it day by day. If we go on over to Palantir, another chart that I think is worth taking day by day, if I had to trade, I was joking with the group, if I was trading based on vibes, I would say my vibes are not inverted, but rather regular head and shoulders, and it looks bearish. You've lost the 20, lost the 50, it doesn't know what it wants to do the last couple of days. I would tend to be a little bit more bearish. This was a failed breakout to the upside, immediately smashed on high red volume, and now just kind of sideways for a lower high, right? So I think I lean a little bit more bearish Palantir. I just don't know what there is to do about it. Like today, it could not really get going underneath the lows. This is not an A+ daily chart setup, so it was not nearly the same as Microsoft, but tried to stab it short underneath the shelf of support and just couldn't get in gear, even with a broad market that was continuing to make a lower low. So nothing to really do on Palantir until the daily chart does something more interesting. Let's go on over to AMD. Huge relative strength on this name. Huge gap and go on that Tuesday when the broad market was down, right? Broad market was sold that day as it was today, and AMD, here we are, relative strength in the top end of this range here. So in my view, this looks good, something like that over time. Heads up, update level. This is something we did today at 225.25. I'll be watching that tomorrow for a possible Brigade bolt to the upside if TSM earnings go well. If TSM earnings are a tank, maybe it's back down for something at the gap. But for now, top thought, consolidation, Brigade bolt here. Other than that, treat it as a range until proven otherwise. Like Meta, like Microsoft, this is a range, many, many inflection points, right? Many, many, many inflection points. If TSM is proper, that's a trade that's probably worth some size, right? So we shall see. Let's go on over to Robinhood and see what's going on here. This is like Palantir. I hate the daily chart. This is a range. Here it is on the hourly. I'll just show you that range with a little bit more clarity. Zooming in a bit, you can divide it into clean thirds. With the price action over here, you're in the middle third. I don't think there's anything to do in the middle third. No thank you. A little bit more bullish. Maybe it's a long. In here, a little bit more bearish. Maybe it's a short. Maybe it's mean reversion. I just don't love Robinhood here. It does trade a little bit like crypto. We've seen a little bit of strength in crypto, as mentioned. Bitcoin breaking out, but we'll go IBIT just to bring this one up as a bit of a cleaner chart, breaking out of the top end of the wedge. Your MSTR kind of struggled today a little bit. Let's go MSTR, which actually... yeah, I'll give you this one. This is not included in the 3 trade ideas I was thinking of, but maybe MSTR pullbacks over 170 could set a higher low over the breakout range. We'll see. Crypto would need to remain strong into the end of the week for that to be a possible idea. But let's get into the 3 ideas that I was intending. ASTS is the first of those ideas. Red to green move today, reversal. I think they call that, shout out to Scott. Not that we're buddy-buddy. He wouldn't know me from a hole in a wall. But Scott Redler's got the red dog reversal, right? I think that's his bread and butter there. Red to green underneath, right? Coming back into range, back up into this zone here. Daily hammer, 92. Over today's high, I think you could get into the highs. And if we look at the theme overall, RKLB is the leader. It went out to a new high today. I don't know about buying this at the tippity top of the move, but at least on ASTS, you could manage your risk against this bar here and still be thematically relevant there. Let's get on over into KWEB. This is generally a proxy for our China internet companies. Think about your Alibaba, your JD, your PDD, Pinduoduo, Baidu, all that stuff. I'll save Tick's call for the group only, but KWEB, kind of interesting. Possible look below and fail into this gap below. The thing about these names on the China side is that because they're mostly ADRs and they trade over on those markets and we just get sort of the leftover scraps, just be very prepared for gaps. Again, the thing I'm thinking about is generally that this is breaking out through the trend line here. We got a gap up. It's holding thus far. And on today's daily bar, right, you can see we swept the 2-day low and then closed back inside the 2-day range. Up to you how you want to get involved, if you want to get involved in something as gappy as this, with all the geopolitical risks that something like this has. But as of right now, that is one of the ideas and themes, China theme, is probably worth paying attention to. And finally, APLD, Applied Digital. They just reported the other day, so we're in the clear with earnings. Take a look at this retest of the double bottom neckline. Interesting hammer today over its high. I think you're off to the races up at these highs, headed towards that 40. Generally in a nice configuration. Even, I'll let you do your homework on your own, but zoom out to a weekly is all I'll say. Shout out Balboni, and we'll leave it off at that. That's what I've got for you in today's installation of the Midweek Market Update. We covered a lot today. Let me know what you thought down below in the comments section or by giving the video a very simple thumbs up. As always, we're live every morning at the 8 o'clock Eastern time frame. Hope to see you up in the penthouse offices tomorrow morning, bright and early, for another day, another exciting day. We could play, let's roll the dice on tariffs. We can play, let's roll the dice on JPOW, China, Iran, Greenland, the whole 9 yards. But more importantly, let's be serious. It's all about TSM. Semiconductor earnings tomorrow morning. Let's get the job done. I'll see you there. Have yourself a green trading week. And as always, I will catch you in the next one.